please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hi there, good morning, welcome. You're watching Power Breakfast on CNBC TV18 in the Mumbai News Centre. I'm Mangla Malu. With me is Ekta Batra. Good morning, Ekta. As we kickstart a new trading week, the last couple of sessions were rather rough, but over the weekend we got some positive news from both Infosys, Biocon, as well as the Dow futures. That one should come up for you. As the US passed the tax bill, Dow futures is up about 200 points as we speak.
Yes, absolutely, Manglam. Well, morning, and it is going to probably be quite a hectic Monday to start off with, considering that despite the fact that we are in the holiday season of December, we have a lot of cues to work with, including a Reserve Bank of India meeting. Right,
first up, let's take a look at the Asian markets as the Dow futures are up 200 points. Asia, however, has started trade on a cautious note. If you take a look at what's taking place in the Nikkei, remember there was a decline in the US stocks on Friday on a report that Micheal Flynn, the former White House National Security Advisor, was directed by the then candidate Donald Trump to talk to Russia. So that one was down about 350 points on Friday, thereafter recovered about 310 points from there. As a result of that, we're seeing some weakness in the Nikkei, and this despite some weakness that we're seeing in the dollar yen, 112.66. The Korean markets, they opened up with a gain of close to 0.4%. Now they have given up that, trading closer to the lower end of today's trading session. Also take a look at the Taiwanese as well as the Straits indices. The Taiwanese index opened in the green, has now moved into the red. The Straits too sitting with a cut of 0.3%. What does all this mean for our markets? Well, the SGX Nifty earlier indicated a start of close to 35 points in the green. Now still maintaining that with a gain of close to 23 points as far as our markets are concerned.
Okay, well, probably a bounce back is what we could see, but let's tell you about what took place on Wall Street. It was quite a wild ride. It was a volatile day of trade on Friday after the former National Security Advisor Micheal Flynn pled guilty for lying to the FBI over his meetings with the Russian ambassador. The major indices hit session lows while the Dow dropped 350 points before closing 40 points lower. So it did recover from the day's low. The S&P 500 declined 0.2%, while the Nasdaq Composite lagged, pulling back 0.4%. But the tax bill was passed by the Senate late on Friday night, so the Dow futures at this point in time is higher on the back of that tax bill being passed, and that's what they'll be reacting to in today's trading session.
You said it, Ekta. You know, the US Senate did pass the Republican tax bill, which will be reconciled with the version passed by the House. The bill is passed in a close 51 to 49 vote. The bill is now one step closer in getting President Donald Trump's desk for his signature. However, the big difference between the House as well as the Senate bill is that the Senate bill is seen as more deficit-friendly rather than the House bill. Republicans are, however, hopeful to reach a deal by Christmas, and here is what the tax bill will mean for the Americans going ahead.
So last night at about 3 in the morning, I got a call.
President Trump today describing the moment overnight he found out his first big legislative win looks locked in.
For years, not since Ronald Reagan has anything even come close. They haven't passed him. They couldn't pass him. They couldn't get the votes.
But Republicans got the votes to pass that massive tax plan that would cut individual taxes, cut the corporate rate, and do away with some popular tax breaks while adding a new child tax credit. A nonpartisan analysis estimates it'll add $1 trillion to the deficit. Billed as a middle-class cut, there's still no guarantee all Americans will see their taxes go down in what's now the biggest overhaul in decades. Approved in minutes.
The Tax Cuts and Jobs Act, as amended, is passed.
Only hours after senators got their first look at the final bill. That left Democrats furious with a process they slammed as rushed and opaque.
This is the tax bill. See how thick it is? I want you to take a look at this, folks. This is your government at work.
Back in 2009, Republicans leveled the same criticisms at Democrats during debate on the Affordable Care Act.
This massive piece of legislation is being written behind closed doors.
That was then, but now?
But the argument that this was not an open process is ridiculous. Sure, there were changes as we moved along, but the core of the bill, everybody was familiar with.
It's not a done deal just yet. The Senate still has to square its bill with the House version. to figure out, for example, the number of tax brackets, whether individual tax cuts are temporary or permanent, how generous the child tax credit should be, and whether corporate cuts should start immediately or later. That process will take some time, with Democrats now promising to use that window to fight. Senator Bernie Sanders today.
They have significant differences that they have to reconcile, which gives us 3-4 weeks to rally the American people.
Okay, well, that's all what took place in terms of all of the government officials in the US. But let's listen in to some experts and what they think this major tax overhaul could mean for the United States.
I think it was expected that we were going to get this tax plan through. It seems that the incentives for the Republican to pass this tax bill are very strong, because if they don't, they've got midterm elections coming up next year. They will have had no major policy reforms since the Trump administration, so the pressure is very, very strong. The differences look like they can be ironed out rather quickly, so I would expect that it does get passed before year end.
It's a pretty big Keynesian stimulus, trillion or $1.5 trillion injection into the economy over the next 10 years. That's a Keynesian stimulus, should produce some growth. Secondly, the lower tax rate on corporates will improve the incentive structure for corporates, make them work that bit harder, and it's that bit more productive to get another bit of growth. So that's good. The negative is that the individual tax changes are a bit muddy and a bit questionable. True, the rates are coming down on both the Senate and the House versions, but the non-deductibility of state and local taxes will in effect increase the marginal tax rate for people on the coastal cities.
Okay, but in quite a shocking story and a shocking revelation on Friday, former National Security Advisor Micheal Flynn pleaded guilty to lying to the FBI about conversations with Russia's ambassador and disclosed that he is cooperating with the special counsel's office. Meanwhile, the US President Donald Trump shrugged off the news and suggested that he has been holding back something important regarding what he knew at the time of ex-security advisor Micheal Flynn's firing. He tweeted, and I quote, "I had to fire General Flynn because he lied to the Vice President and the FBI. He has pled guilty to those lies. It is a shame because his actions during the transition were lawful. There was nothing to hide."
All right, and across the Atlantic and European markets, this thing also weighed in on sentiment out there. The weakness on Wall Street weighed in on the sentiment. Also the tech sector, that one was one of the worst performers amid sign of investors' anxiety about the parts of the market that have seen a robust performance. So we saw some bit of profit taking there. Auto stocks too had a weak session in trade. So all the three frontline indices, the FTSE, CAC as well as DAX, saw sharp cuts. The FTSE was the outperformer there after its underperformance in the earlier part of the week owing to the strength we saw in the pound. Across the periphery too, we saw sharp cuts in the Italian index as well as the Spanish index, both of them sitting with sharp cuts. If you take a look at the emerging markets pack, the Russian markets were down about 0.15%, but the Brazilian index, they were in the green with about 0.15%, and the Brazilian markets gaining about 0.4%.
Okay, let's tell you about the other asset classes. The currency space, the US dollar has recovered some of Friday's losses as US futures rallied after the Senate passage of the tax cut legislation really overshadowed news reports of Micheal Flynn's guilty plea for lying to the federal agents. The Japanese yen has weakened versus the US dollar.
In the world of commodities, crude oil prices fall after surging nearly 2% on OPEC extending output cuts.
And from precious metals, gold prices dip as expectations that the US tax cut bill are closer to passage by the House, and as news on the politics surrounding the investigation of Russian meddling in the 2016 election is really digested by investors.
All right, the Bitcoin, that one hit an all-time high above that 11,700, rebounding massively from a 20% plunge that we saw last week. Remember, Bitcoin futures trading will be starting this month, which is potentially a major step in the evolution of the digital currency.
Back home on Dalal Street, it was a weak day of trade on Friday, with the Nifty and the Sensex both losing around 1% in the afternoon session. So most of the weakness that we saw was really in the second half of the session. So the Nifty Bank lost around 0.5%, while the mid-caps mirrored the benchmark indices. Well, Manglam, how are we set up for today?
As far as today is concerned, Ekta, remember we are seeing some positive cues coming in from the Dow futures. But remember, the last two sessions for the Nifty, they've been rather rough. 240 points eroded in the last two sessions itself. The mid-caps, which were outperforming up until Friday afternoon, saw a sharp correction, 400 points from the high point on Friday. And that primarily happened because the Nifty broke below that 20-day moving average of 10184. In fact, it broke the 20 to 50-day moving average movement range. So that was something that got the investors worried a bit. But then again, in the evening, we got the flows data. The FIIs and the domestic institutional investors both ended up on the buying side. So 482 crores worth cash market purchase is what we saw. So what could probably explain the kind of correction that we saw? Was it stock futures unwinding? Well, FIIs did sell about 500 crores in the stock futures on the first day of the new series itself. If you take a look at the stocks as well, Balkrishna Industries, Mahanagar Gas, the likes of Tata Power, Indocount, all of them saw price correction along with the open interest falling down, which could perhaps been long positions being unwound. The likes of McLeod Russell also saw some long unwinding. In index options, FIIs, they bought long put contracts and added short call contracts. So if the markets were slightly much more weaker than what we saw, then maybe we could have seen some action in index futures. But the FIIs choose to play this via index options. That is something we need to keep an eye out of. More selling in index calls now than the start of this series. But now where we are, 10121, that has been a bit of a support zone, technically 10,100 to 10,120. That is because the earlier fall that came in from 10,452, the all-time high closing, was arrested at 10118. Also remember, in the September up move, this zone was a bit of a congestion zone. So once you cross that on the lower end, this becomes a bit of a support. That is what technical analysis theory says. If we do go lower, then we have the support of the 100-day moving average at 10,064. And much below that is the 200-day moving average. We're going in with positive cues. Dow has recovered 310 points from Friday's low, ended 40 points lower, and the US Senate passing the tax reform bill has taken the Dow futures higher by 200 points. So that is something that we really need to watch out for. Another couple of stocks which will be in focus, Infosys. Near-term uncertainty is at bay as we've seen the announcement of a new chairman. It has 5% weight on the index, which will be a positive. From the mid-cap arena, we'll have Biocon, as the US FDA approval of trastuzumab is a positive. But the key cues this week, we'll have the December 6th RBI policy, and in the near term we have the FOMC meet as well as the Gujarat election results. So those are the few things that the street will be watching out for.
Okay, stocks?
A lot of stocks. We spoke about Infosys and Biocon already, but DLF, promoters will infuse about 11,250 crores in the company. That is a positive. We're getting some news from auto sales, the remnants of that. Tata Motors, good sales in the domestic business, 48% volume growth led by 73% CV volume growth. Hero MotoCorp as well, a 26% growth. This compares with expectations of 20%. The only chink was TVS Motor, 12% growth versus expected 22% growth. Wipro, there is some uncertainty out there. The National Grid has sued the company for $140 million. The company has said they will challenge this lawsuit in a US court, so we'll watch out for that. JSW Energy has signed power purchase agreements worth nearly 208 megawatts. Transformers and rectifiers, they've received about 127 crore worth orders coming in from Power Grid. Alpha Jio, they've received an order from ONGC Gujarat worth nearly 155 crores. Now, this is important because earlier there were rumors that ONGC will not give orders to Alpha Jio itself. Merck Electronics, they've issued about 1.9 crore shares to non-promoters at 37 rupees a share. And among the allottees, we have influential investor Ashish Kacholia too.
Okay.
On a big positive for Biocon and a huge milestone for Indian pharma companies, the US FDA has approved cancer drug trastuzumab used in the treatment of breast and metastatic stomach cancer. Ekta joins in with more details. Ekta, how big is this news for Biocon?
Well, you know, besides Biocon, I think this is a huge milestone for Indian companies as well, because just to put the milestones into perspective, this is the first FDA-approved biosimilar, which is for the treatment of breast as well as metastatic stomach cancer. It is the second biosimilar which has ever been approved in the US for the treatment of cancer, and Biocon is in fact the first Indian company to get an approval for a biosimilar in the US markets. So remember that this was long awaited, that only if Biocon solves its US FDA issues successfully would they have received approval for this, and that's exactly what happened. Now, what does this mean in terms of the maths for Biocon and Mylan? Remember, they both are in partnership for this particular biosimilar. It's around a $2 billion market size for the US markets and $7 billion in terms of global sales. So for $2 billion, if you do the math and if you go towards revenue share, etc., what it means is that Biocon could at least make around $100 million annually from this particular drug. But what it also means, besides making money from this biosimilar, is that Biocon has managed to push through the biosimilar market in the US. They already have other biosimilars in their pipeline, such as pegfilgrastim. So what this means is that if they've got approval for trastuzumab, there is a higher chance that they'll probably get approval for other biosimilars such as pegfilgrastim as well. Now remember that biosimilars is the new generic market in the US. That's the way things are moving in the US, and Biocon is the front runner in the Indian space in order to be able to get approvals for biosimilars in the US. And hence, besides the fact that this is a huge positive for Biocon in terms of getting making money from this particular drug, it also means that they're pushing the door open and entering the biosimilar market in the US, which is a huge opportunity. So net-net, very big positive for Biocon. And they've managed to prove that they've managed to solve US FDA issues successfully just in the matter of a couple of months as well.
All right, big news for Biocon. We'll watch out for that stock from the mid-cap space. But another big development over the weekend was the announcement of Salil Parekh to head Infosys as the MD and CEO effective Jan 2nd. He is ex-Capgemini. What could this mean and what are the challenges ahead? Well, Kritika joins in with more details. Morning, Kritika.
Morning, Manglan. So, of course, this reduces the long overdue uncertainty on who the CEO will be. Infy is now prepared for the next leg of growth. But just to give you a sense about Salil Parekh, Salil Parekh has been very critical in Capgemini's India growth story. When he started, the headcount was about 25,000. Currently, Capgemini has 1/3 of its employees coming from India, almost 100,000 employees. He has scaled up Capgemini and headed the India operation, the APAC operations, as well as taken, and right now when he quit, he was a deputy CEO handling significant portions of the upcoming emerging technologies like SMAC, which essentially is social mobility, analytics and clouds. And that's really where he fits in. He has spearheaded North America, Europe. He has a strong grip on two geographies that are very important for Infosys. It's a very similar culture if you look at the two companies in terms of the working relationship, in terms of the kind of client-facing relationships that are required. For instance, Infosys and Capgemini both have a very strong focus on consulting. They have a very strong focus on services. And Salil Parekh has been a services guy versus a Sikka, who was a largely products and IP-related person. Also, just to point out over here, Salil Parekh was one of the critical people who were responsible for Capgemini becoming the largest bidder for the acquisition of iGate, and that was a huge bet. So it leaves the question that Infosys, at a time when they're ready to expand aggressively, is Salil Parekh someone who can dare to do that? What are the immediate challenges? The most immediate and most critical challenge will be creating a cohesive and a complete dialogue between the management, the board and the promoters, ensuring that the issues that had been raised are completely out of the picture, rebuilding brand Infosys after the whole founder was splat. But, from an operational perspective, they need to invest heavily in digital technologies, into acquisitions. They need to build an aggressive sales leadership. They need to ensure that the kind of morale reduction that had happened in terms of employees and clients is sorted after the entire mess. So he has a hands-on job. 2nd Jan is when he is joining. It's a period of 5 years. We don't know if there's going to be further management changes, but yes, the long due uncertainty over Infosys at least should start reducing now.
Okay, all right, Kritika, thanks very much for that. So Infosys will really be the other big stock in focus this morning. But let's not forget DLF from the real estate space. The board has approved raising 3,500 crores via QIP. Sonal is here with more details on it. Sonal, morning.
Good morning, Ekta. Well, it's definitely a good news for the shareholders of DLF Limited, as the board has finally given a green signal to capital infusion plans and raising funds through QIP. Now, in totality, they'll be raising funds of around 14,000 crores. 11,250 crores will be given in by the promoters, and that will be done by issuing warrants, and 3,500 crores will be issued by raising funds through QIP. Now, remember, the total debt of DLF as on September 2017 is 27,000 crores. So, overall, the debt will reduce to half by 14,000 crores, and this will be done in next 2 years. Also, there is some changes in the board. There will be 2 members who will be inducted on the board, and the finance department will see some sort of changes. Now, the management expects that the net debt will halve by FY19 and the net debt will reduce by FY 2020. What this will do is it will reduce the debt equity ratio to 0.3 times from 1.1 times earlier. Also, DLF has an unsold inventory of around 15,000 crores, which will take around 2 to 3 years to liquidate. So that is another positive coming in for the company. And now Edelweiss has upgraded the stock to a buy and has raised the target price to 273 from 185 earlier. So overall, quite a positive sentiment for the company.
All right, Sonal, thanks a lot for that.